Hello, trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a look at the recent US dollar strength that we've seen in the market and asking if this is one, sustainable, or it can even continue to newer highs. And of course, that question is going to depend on bonds and the interest rate environment, primarily in the US for this US dollar, but obviously for each pair. It's going to depend on rates in that environment as well. But let's stick to US dollar, and first let's stick to the price action we've seen in this dollar as it's hit year-to-date highs in a number of major pairs, especially this dollar yen seeing USD strength rallying past 150 again. And keep in mind that that 150 level has only been closed above on a daily basis a handful of times in the last 30 years, and that 30-year high is approximately 150 going back to last year where we saw this. And after those highs were seen, dollar yen fell all the way back close to 140, and we got in this mode once again that we've seen a couple times in recent years. It's been a strong couple of years for this US dollar, but we've seen a couple of times of the dollar reversing, and the market and people in the market thinking that, oh, okay, well, here's coming the long-term mean reversion of the dollar moving back lower and depreciating to more historically normal prices against the yen or the euro or the pound. And not so much, as this dollar has really held on to its highs for the last couple of years. And we're right back there again. And this begs the question of, can we see new highs in a dollar yen market or a euro dollar market or an Aussie dollar market? And a lot of that is going to come down to, can we see new highs in US interest rates? And this was one that similarly people had thought was going to reverse towards long-term averages. Of course, you look at the last 10 or 20 years in terms of U.S. interest rates, and here we're looking at the 10-year yield, which is a benchmark for U.S. rates. And the average 10-year yield over the course of the last handful of years is closer to probably 2 or 3%. Obviously have been higher than that in the last year or so. And another one where they got up to 5%, and no coincidence that when U.S. yields were up at their highs of around 5% for the last several years, that was coinciding with that US dollar strength against the yen and against a number of major currencies. But similar to that, dollar reversed from those highs, and the market actually started pricing in not only lower treasury yields, but rate cuts coming from the US Central Bank, the Federal Reserve. And now those expectations are starting to fluctuate in a big way. You see here 10-year yields are bouncing back and could get back to those highs of 5% and beyond. And we'll take a look at the rate cut odds in just a second. But if we see a resurgence in these yields in the U.S. interest rate environment, it could mean new highs for dollar, not only against yen, but even against these other major currencies, such as the euro dollar market, that were only a little more than a year removed from parity in that market. And so could this USD hit new historic highs against a number of these major currencies? Yeah, absolutely. But that's going to depend largely on the interest rate environment. And also, if there is a resurgence in U.S. interest rates to the upside, will the equivalent in the euro area or in the UK or in Japan, will they stay where they're at, or will they move higher or lower? That's going to be very meaningful to this as well. But it's likely going to start with that U.S. rate story, and if, one, they don't cut by as much as what was expected, or two, they don't cut at all. And let's actually take a look at the current probabilities of where U.S. interest rates could be headed by the end of 2024. And keep in mind that at the end of 2023, these projections for the year of 2024 factored in, I mean, anywhere from 4 to 7 rate cuts, and now the greatest likelihood they're focused around 4.25% to 4.5%. That would only be 4 25 basis point cuts, and so effectively the market has priced out 2 or 3 cuts from a couple of months ago, which lets you know a number of things. One, this has coincided with the U.S. dollar strength, and this doesn't necessarily guarantee that the dollar is stronger. Just because U.S. rates are moving higher, Euro area rates could be moving even higher than the U.S., and the Euro could be outperforming the U.S. dollar, but that hasn't been the case in recent trading, and we have seen these U.S. rates move higher with U.S. dollar. And so, one, you're seeing that dollar rise as the market is pricing out interest rate cuts. Two, they could price out, they've very easily, in essentially the first month and a half of the year, priced out 2 or 3 rate cuts. That lets you know how quickly they can price in or out interest rate activity. So 2, they could price out even more cuts. Or 3, the elephant in the room here is if inflation and employment are still, hot here in the U.S., then the Fed doesn't have to cut at all and could actually bring interest rates higher, and that would likely coincide with some more of that historic U.S. dollar strength, all else equal. But so much on the table here when it comes to potential for U.S. dollar strength, but also weakness. Keep in mind that if this reverses and they start pricing in the rate cuts again, you could see that dollar fall. But right now, the trend so far in 2024 has been yields moving higher, interest rates moving higher in the U.S., and that U.S. dollar getting close to those historic extremes. Whether they get through it, we'll see. It's going to depend on a bunch of data and what the Fed says throughout the year. But let's close out the show today by taking a look at where traders are currently positioned in this euro dollar market, as we've got 58% of IG clients with positions in this market currently long that euro, short that dollar, trading on this is maybe just a flash in the pan. They're not going to get back to rate hiking in the U.S., looking for that reversal and not looking for that extreme in U.S. dollar. But again, no guarantee here of future price action, just showing you that traders are kind of going against that U.S. dollar, 58% of them long euro, short USD. But hey, plenty of more trading to come here throughout the year as we get more data in the U.S. and more information on what the Fed is likely to do with their interest rates, and from there where Treasury yields and beyond are going to move. But if you're looking for the next move in U.S. dollar, it likely could be coming from the U.S. interest rate environment.